Can small business owners really trust virtual accounting firms? That's the question we'll be answering on today's episode of the Profit Pillar Show. I'm your host, Parker Stevenson, CEO of the virtual accounting firm Overreliance, and also the author of the book, Profit Pillars. Now, obviously, because I am co-owner of a virtual accounting firm, I'm going to tell you, of course, you can trust virtual accounting firms. But there is a reason I brought this up, because earlier this year, a very popular accounting firm, virtual accounting firm that was really kind of taking a very startup, tech-forward approach to serving small business owners with their accounting needs, Bench.co, they went under. They lost their investments. They ran out of money. The business never really figured out how to get profitable because they were charging really cheap prices to serve and capture as many small business owners in the market as possible. They did eventually have to increase their prices over time, but it really was too late. And the experience a lot of people had with Bench.co was really lacking. We inherited a number of small business owners who were working with Bench, especially over the years, and were super displeased with the service and ultimately found us and have worked with us at Overreliance. So, and there are other firms similar to Bench that are still operating, again, very tech forward, all virtual, and are usually priced highly competitively. They're positioning their value based on a low cost of their service. But like I've said many times on this podcast, you get what you pay for. So if you worked with Bench or a similar firm and have had a crappy experience, to not mince words, I don't blame you for feeling like, I don't know if I can trust a virtual accounting firm. But Overreliance, we've been operating for 11 years profitably. We've had clients who have stuck with us for a decade. So we know it's possible. And there are other firms like us that operate a virtual business. They have team members all over the country, and they do great, and they deliver a great service. So the problem isn't the fact that the accounting firm is remote. The problem is the approach a lot of remote accounting firms, especially very tech-backed accounting firms, investor-backed accounting firms, there's usually some qualities to the service that make the service very frustrating as a business owner. So I wanted to go over a sort of checklist of red flags, things to look out for when you're looking for a virtual accounting firm, just to make sure you don't wind up with a virtual firm that just doesn't deliver what you're hoping to get. So let's start here. The first thing that I think you need to look out for is, do you own the data? You are running your business, you're paying for things, income is coming through, those transactions are going through your bank accounts, your credit cards, your merchant accounts, and all those transactions are being essentially copied over into bookkeeping software where those transactions now live, and you can access those transactions and run reports around them. But when you work with a firm like Bench, they have their own proprietary software. So when they do your books, all of the transactional data is in their proprietary system. So you can't really go in and access it the way you want. You can't just export it all, and you definitely can't easily transfer it to QuickBooks Online or Xero if you decide to leave Bench. And there are more of these tech-oriented accounting firms who, rightfully so, want to create their own proprietary accounting software so they can have more control over it, find efficiencies, and that all makes sense. But ultimately, as small business owners, you're going to change bookkeepers and accountants sometimes. And so what they're banking on is that when you realize you can't move all your historical data into QuickBooks Online and you're essentially going to be starting from scratch, they're banking on you not leaving, even if you're unhappy. And so no one wants to feel stuck. That's why, at Overreliance, we use QuickBooks Online. If a client leaves, they still own their QuickBooks Online account. They have all their reports. They have all the transactions. It's all there for them. It doesn't just disappear, or we don't hold on to it and say, sorry, it's ours. You can't get it. And again, with Bench and some of these other firms, you can get your financial reports and you might be able to get a general ledger, but you're really not going to get the historical data, and you're not going to be able to move it into bookkeeping software of your own. In theory, you could, but it would be extremely tedious, and a new firm's would charge you an arm and a leg to do that. So that's something I think is really important. Is the virtual firm you're working with, do you still own the work they've done for you? In QuickBooks, in Xero, in whatever bookkeeping software you want to use, but having access to that data and being able to take it with you if you eventually leave, I think is really important. The second thing to look out for is, does the virtual accounting firm really emphasize AI? Because that is kind of a hot trend where a lot of accounting firms are going, hey, look, we use AI. Our prices are so cheap because everything's automated and AI is doing everything, and you'll get an account person, so still get to work with a human, but AI is the future. It's going to do all the things, and we get to, we don't have to charge you very much because AI is doing the work. The reality is AI is not there yet. Corey and I have been in the accounting field for a long time. We're a pretty modern accounting firm ourselves. We use a lot of very modern systems, and when AI is really ready to take it to the next level, we'll be ready to do it. We'll take it on and be glad to use AI to help our team focus less on the tedious sort of detail-oriented tasks so they can focus more on serving our clients and finding new ways to support our clients without all of the tedious work of bookkeeping and tax compliance. And if AI helps us with that, great, but it's not there yet. And a lot of these virtual firms that are really over-marketing AI are underinvesting in humans and team to oversee the work AI is doing. And ultimately, the quality of books or the quality of tax preparation you get is going to be subpar. It just is. AI is not good enough. And the one thing I will say is, even if you have a human looking over the work AI is doing, what we've sort of come to realize after, 11 years in the accounting field for me, 15 years for my business partner, Corey, that fixing someone else's accounting mistakes is a lot harder than simply doing it right the first time. It's always harder to clean up someone else's mess, whether it's a human or AI. So when AI is inevitably going to mess things up, do you trust that the people they have to manage your account are going to take the necessary time to clean up the mistakes AI makes? Probably not. So again, it's great that they might be charging very little for their bookkeeping and tax services, but what's the point of paying so little if they're not going to do the work right to begin with? And ultimately, that's something I think as business owners, it's so easy to fall into the trap around, not just in accounting, but in terms of really any service or any software. How can I get it as cheap as possible? And sometimes maybe working with a more budget-oriented service does work out for you, but ultimately you do get what you pay for. And when you're running a business, you're paying service providers to get you results. So if you're paying them to not do the work right, then what are you really paying them for? The other thing I think you need to look out for with virtual firms, and really a lot of firms, even if they're not what you would consider a virtual firm, but they are a more brick and mortar accounting firm, is just, are they outsourcing a lot of the work that they're doing on your business overseas? Now, there's nothing inherently wrong with overseas accountants doing accounting work for U.S. businesses, but it does throw up some red flags. There are security concerns that I would have as a business owner if my data is going overseas to offices and accountants that I'm maybe not even interacting with. Because a lot of the times these virtual firms will have US-based sort of account managers, but then they're passing on all the work to overseas accountants, and those overseas accountants need your financial data in order to do the work. So I think ultimately, are you comfortable with that? There's a bunch of security concerns that I have over doing something like that. So, and then also just operationally, to have these accountants that aren't working in the same time zone as you. There's a lot of operational issues that we see and our clients have experienced when they worked with firms that had overseas accountants, and it very rarely results in a better accounting experience for you as a small business owner. It might result in a cheaper accounting experience, but definitely not a better accounting experience. So those are just some of the factors I think you have to think about when you're working with an accounting firm that's supposed to be helping you with a US-based business with US-based tax code and needing your books and the transactions in your books categorized from the perspective of a US-based business. Are you willing to have overseas accountants really manage that manage all that for you and trust that they're going to deliver a great experience? Now, the other thing that I think is a red flag is the price. If a virtual accounting firm has a price that seems too good to be true, they're going to do your bookkeeping for $100 or $150 per month. Even $200 or $250 per month is really low. Are they going to file your taxes for $500? So these are prices that really would feel too good to be true. So why or how could they charge prices like that? Well, they're over leveraging AI in a way that is going to make mistakes and give you a really poor customer experience, or they're outsourcing everything to very cheap, underpaid labor in other countries, or they do have a US-based team and they're not operating using AI, but they're overloading their accountants with work. Because if you're not charging enough, then that means their accounting teams need to be able to manage a lot of clients for the firm to actually make a profit on the work that they're doing. So when you have an accountant that's overworked, overstressed, what are the chances that they're going to do good quality work? Probably pretty low. I mean, there's a lot of accountants that will work 80 to 100 hours a week during tax season. And do you want someone who's over caffeinated and super tired filing your tax return, which has major implications on the financial state of your business? But unfortunately, that's kind of the culture of accounting, is accountants will just overload themselves and their teams with work. They compete in the marketplace by charging less than their competitors. And ultimately, the ones that lose are you as the business owner. Again, if you're only looking for the cheapest price, then you're going to get work quality that matches up with that. There's no magic bullet out there where you get to have high quality service and pay really low prices. Something's got to give with a business model like that. And so ultimately, a lot of this is going to depend on how big is your business, how complex is your tax return, how complex are your books. And if it's really, really simple and you just really don't have a budget to work with someone super high quality, then again, maybe a low price virtual firm is better than you screwing up the books or screwing up your tax return yourself. But eventually you got to outgrow this stuff and work your way up to an accounting firm that's going to support you in a way that actually delivers the results you're looking for. Now, another red flag here is also, does your virtual accounting firm only communicate via email? Because at Evolve Finance, we do a lot of communication via email with our clients and our team, and it works out really great. But sometimes you need to get on a call. You need to hop on a Zoom call. You need to hop on the phone. And there's a lot of firms that will make you really work to get on a call with someone. And that might be because, well, our team is overseas and they're not awake when you're awake, so there's no one to really help you with that. Or their team is so overloaded and overworked, and sure, they're in the US, but they're so busy they don't even want to get on a call with you. Or simply they're so tech oriented and AI driven that they don't have enough team members to manage all the customer service inquiries they get. So they just get overworked and overloaded customer service people who can't really answer your question that well anyways. And it takes forever to get someone on the phone. So these are the types of things I think you need to be looking at as a business owner and going like, am I comfortable working with a virtual accounting firm with these types of red flags? Because these red flags are likely going to mean there's going to be a mistake on your tax return. There's going to be a mistake in your books. Your books are going to be a mess. And I've said it already, and I'm going to say it again. What's the point of paying someone to do something in your business if they're not going to do it well and they're not going to do it right? So if you are looking for an accounting firm that is a virtual accounting firm, but has a stellar reputation and goes above and beyond to do the work right, then check us out at Evolve Finance. Just go to evolvefinance.com and check out our bookkeeping and accounting services. But as always, thank you so much for listening to the show. I appreciate you being here with me, and I'll see you in the next episode.